So, how much cash should a small business keep on hand? I think Top Gun fighter pilots have something to teach us. Let's dive in. So, every day I'm working with small businesses on their finances, on their bookkeeping, cash flow, invoicing, that sort of stuff. And a very common question is how much cash should they keep in their business bank account? The story of a lot of businesses is that they've got customers and clients, but the cash flow needs today are not being met. Those clients that they do have are paying too far in the future and too many bills are due today. So there's a mismatch in the timing that we have to overcome. And I think the best way to answer this question of how to decide how much cash your business should keep on hand is to think like a fighter pilot. So a pilot has something called a rad out, a radar altimeter, and they use those to set a false floor or a hard deck. The idea is when you're training, you tell your instruments what altitude you want your false floor to be to represent the ground. So say you put in 10,000 feet as the ground. As soon as you hit 9,999, you lose. You're dead. Training mission is over and you go back to debrief about how not to kill yourself for real.
So what sound does the jet make if you break your altitude?
It's kind of a whoop, whoop, whoop.
All right, then you got it.
All right, so say that noise with me, y'all.
Whoop, whoop, whoop.
I'm going to tell you the way to find out your absolute minimum number to set your hard deck for your bank account. Your zero. But really, I think you need to set a goal of having that number be a lot higher than the bare minimum, and I'm going to share 4 reasons why. And those 4 reasons are about surprising tax bills, what I call peace out money, black swan events, and getting that awesome dream client, that really big fish, because big fish are very slow to pay. Hey, if you aren't subscribed to the YouTube channel, I'd sure appreciate it if you did. All right, so let's start with the bare minimum. I think that the bare minimum is 6 months of your fixed costs. Fixed costs are contrasted with variable costs. Fixed costs don't fluctuate with serving your customers and clients. Variable costs fluctuate with how many clients you have. They increase with the more customers that you have, and they essentially go to zero if you don't have any customers. So what are your costs that you incur whether you have no clients whatsoever? So you do have to have solid bookkeeping to get at this number. Everything has to be classified so you can see your true numbers, your true story. Another way to think of these 2 categories, or a term that you might have heard, is operating costs and cost of goods or cost of sales. I don't work with clients that have true cost of goods for physical goods. My specialty is the FreshBooks bookkeeping software, and that is built for people who don't sell things that they can touch. Cost of goods is more of a manufacturing term, but if you're listening to this and you're in a manufacturing type of a business where you're selling products, then you can think about a cost of goods concept as parallel to cost of sales, which I deal with. There are going to be some expenses that increase as your sales increase. So I recommend that you take a look at your profit and loss statement, and hopefully you have clearly identified accounts in your chart of accounts that are going to be for your fixed costs, like rent if you rent an office, or maybe your business insurance, or your licensing fees, maybe your website fees, all the stuff for your tech stack and software, like your Dropbox, your Zoom, your CRM, all those things that you use to run your company, those apps that you pay for no matter how much work you do. You might also have other professional services that you purchase, like a virtual bookkeeper or a tax professional or a lawyer that you keep on call. And those costs don't change if you get more clients. So if we compare a business to running the business of your home, common wisdom says that households should have at least 6 months of expenses saved up in an emergency fund, right? So some people are willing to be a little riskier and have a slightly lower emergency fund, and some are very risk averse and they're not comfortable with just 6 months. But that is how you would calculate your business emergency fund. If you lost all your clients and thus you lost all your client-related expenses, how long can you stay open? So just to beat this dead horse, we'll put some numbers to it. Let's say you're a highly skilled and sought after freelance, like Salesforce developer maybe, and you have $1,000 of fixed cost a month because your operation is pretty lean and you don't have any employees, then you should have $6,000 to keep your business open for 6 months with no clients. That is your hard deck. So you save and save inside your business until you hit that number in business cash. And when your bank account drops to $5,999, you go back to the hangar and debrief with your instructor pilot, your mentor, because you would have died if it was not a simulation. But just like that flight student, your business is still alive because you set your rat out to give the emergency warning. But I'm going to suggest some additional considerations that are going to increase that number that you should choose to have as your minimum number for your bank account. I think the hard deck of business cash needs to be higher. I've got 4 different principles to how to calculate how high the number should be. These are going to be ultimately unique to every business. My hope is that you'll apply them to your unique situation. The first reason is that I don't want you to be hit with a surprise tax bill and not be able to pay it. See, the more profitable you are, the more you will pay in tax. But if you're not staying up on your bookkeeping and if you don't have professional tax help that is helping you estimate your quarterly tax payments, you might be underpaying your quarterly payments. Or even if you're an S Corp and you have yourself on payroll, if your salary is the same as it was last year and you didn't change it or changed your withholdings and you have a killer year and you doubled your business net income, you're going to have a really big tax bill. But if you've been taking distributions because you saw money in your bank account and you think, oh, that's mine, I get to take it, and you're not thinking about, oh, I'm going to owe a lot more in taxes this year, then you're going to have a big tax bill, but you're not going to have the cash to pay it because you took it all out as distributions and you spent it. So this is my first argument about why you need to have a lot of cash in your business, because the IRS is the last creditor that you want to have. So if you set a high number for your hard deck of cash in your bank account that you're not comfortable getting below, you'll always be able to pay your tax bill. And when that happens, when you have an amazingly profitable year and you have to write that check for that big tax bill, what I hope is going to happen is that you realize that you finally can afford professional tax help and tax planning throughout the year. So you will be paying the right amount throughout the year. So there's not a large amount of taxes owed when you file your tax. All right. The second reason that I think you should have more than just your operating expenses in cash is that I want you to be able to walk away from any customer. So a lot of people go into business because of freedom and flexibility, right? They're tired of working for the boss. Well, congratulations. You are now a business owner and your clients are your bosses. You traded one boss for 10 or 30 bosses or 100 bosses, depending on how many clients and customers you serve. In the financial independence community, there's this concept of a big pile of cash, and there's a name for it, but it has a bad word in it, so I'm just going to call it peace out money. It's that pile of money that says, when you've had it up to here, you're saying peace out to your boss. I don't need you in my life, and I'm walking away because I have the money to do so. And I want you to have the ability to do that in your business as well. Not walk away from your business, but walk away from clients. So how can we make that number a little more concrete? A way to think about that is to make sure that you have money in your bank account so that you can refund any customer at any time. This will allow you to have greater negotiation power and greater confidence when you have moments of disagreement with a client. And we've all had them. I've had them. I've had clients who've been unsatisfied with me. And because I'm confident that I'm actually doing really good work, it's not a crisis whenever I have a client relationship that's not a good fit. I don't depend on that one client's money, and I would prefer to just give it back. Now, you'll have to think about the circumstances in which a refund is appropriate for your industry. I'm not saying to refund anyone who complains, depending on your engagement and your contracts and such, but just mentally knowing that I don't even have to have the conversations anymore to figure out how I can make that client happy. I can just say, I think you'll be happier getting these services from another company. It's very freeing. And it's just like that ability to walk away from a job. You work with the clients you want to work with. You're comfortable walking away whenever someone puts up a good front at the beginning. Maybe their personality ends up being kind of crazy or circumstances have changed and you need to break that engagement. Oh, and if you have staff, you will be able to be a better boss and stick up for your employees when you can break any client relationship at any moment. Because what happens if you don't have a lot of cash and that client that paid you that deposit or paid you that retainer for 6 months project work, and that client starts to treat your staff poorly, you need to be able to break that relationship right away. But if you don't have a large financial margin, you're going to be laying in bed at night and weighing the outcomes, when if you just had plenty of cash in the bank, the outcome would not even require thought. That client is gone, your staff is more important, and you don't have to keep the bad client to stay open. So that's the second reason. Figure out your peace out money for your particular business. The third reason I think you need a lot of cash is what I will call a black swan event. There's a book called Black Swan, and the basic premise is that humans are notoriously bad at estimating the likelihood of catastrophic events. We underestimate catastrophic events. So I want you to remember that life is long, and if you want your business to go long, I want you to be thinking 2-3 years out. How long can you stay open and just have minimal operations? I'm talking minimal, but still open. Like you just have a website and a G Suite email set up with an out-of-office reply for a long time, something like that. Like what if you have a big health crisis? What if a loved one has a big health crisis and you really want to be able to step back until that health crisis is over? If you think about a cancer diagnosis with a pretty good prognosis, but it's going to be a rough 1 to 2 years of treatment, can you weather that? Or another common situation is that you're pregnant and there are some prenatal troubles, and then you're put on bed rest, and then your child is in the NICU for a while. And you can see how those months would add up to a really large chunk of time. Can you survive those black swan events? Did you lose your whole business because you didn't have cash? What if your business would have been the perfect, wonderful operation for your family for decades to come, and you just needed to get through that one relatively brief period of personal crisis? All right, and the last reason I will give that I think your own number, your own zero number should be high is because the better you do in business, there's a good chance that you will start to get larger and larger clients and larger engagements. And what does that mean? Well, when you work with a small business, that entrepreneur is probably the one that's paying the bills, right? They get an email with an invoice that you sent them from FreshBooks or whatever software you use, and there's an easy button to pay, and they pay it. But what if you want to go after like a big government contract or a big software company? For instance, I have a client who does a lot of design work, and she has gotten some big corporate clients like Adobe and LinkedIn. And let me tell you, Adobe and LinkedIn, they don't pay invoices like that. They have large accounts payable departments, and they're going to try to have as long of terms as possible to pay. You know, you've heard of terms like net 90 and net 60 and net 30. So as your business grows and you have success and you're like, man, I sure would love to have XYZ giant famous company that's traded on the stock market as my client. Well, that's good, but you're not going to see your money for a long time. So by having a lot of cash in the bank, you can weather that contract. You can say yes to those bigger and bigger engagements until those large payments come in with those long payment terms. So chime in below once you've come up with your personal number, that when it drops below that number, you're going to hear that emergency sound in your head. All right, so I hope this has given you something to think about. If so, please hit that like button and make sure you subscribe. If you do use FreshBooks for your bookkeeping, please reach out if you ever need any assistance. And if you're a new entrepreneur and want to check out FreshBooks for your bookkeeping, I can get you a 90-day free trial with my accountant referral link, which is in the description below. I'm Kate Josephine Johnson, and I help businesses build their business legacy.
There we go.
So
Look
sorry.
at me. So, how does the jet sound whenever you're about to go through your altitude?
Sorry. I'm trying to not be just grinning.
So,
Sorry. I